but today's basically the 8th, Monday, basically the week of CPI for the April month. So pretty much today we lost the 10K account. I'm gonna show you guys that right now. Pull up everything real quick. So as you can see here, basically maximum loss exceeded. You are eligible for a 15% discount. Pretty much you can see here we dropped, and today we just took, not even today really. So yeah, today we didn't really do that bad, honestly, you know, since we're already so much in drawdown. You can see we were down and then we went up because the equity, I guess, I didn't have a stop loss in place. So eventually the equity hit, and then eventually, you know, I know what I'm doing wrong and I know what I can improve upon. So, you know, this day, you know, today basically was the 8th, and all we did was take, you know, 40 and then a 30. So 0.7 loss, completely normal, you know, take a loss to the chin and you just bounce back. You know, I'm gonna go review those trades. I still have yet to document them, so I'm gonna keep it there. And then eventually on the 15K we have basically, you know, 6% down. What am I gonna do? I'm changing my charts, changing them, but I'm just going back to how I used to trade, which was 2 charts, time frame pairing, and that's what I'm gonna do to build higher confluence. For this one over here, I don't usually have it open, but I'm going back to the SMT chart. I would win here and there. I wasn't consistent though. That's the thing about this. Incorporated the 2 time frame pairing there in January. I started finding some success, but I was using the model and I was using it way too much to find, you know what, trade ideas, you know, following a strict mechanical model. Nonetheless, mechanical models are good and they do work, but I just prefer to be a discretionary trader, to, you know, do certain things without certain restrictions upon me, because I feel like my intuition is good enough and it's telling me, you know. But recently, you know, it's been horrible because of this, you know, not time frame pairing. I think that's one of the things I need to do, at least time frame pairing. Ladies and gentlemen, and today is pretty much, what is today? Today's the 9th, I believe, and it's the 10th. So 0410, a good day today, just trading. You know, we hit 1 trade only, and I did post it on the Discord. Let me pull that up for y'all guys. Called Bluff, but no bluff. So we're going to indices here on the Discord community. And AM trade on SPX is pretty much done. I'm going to show you guys why on SPX. I mean, Forex pairs, USD, JPY, met our target. You can see just strong displacement. Honestly, that was like a couple hundred pips for CPI. For the crypto, again, we're giving our charting analysis. All right, so I'm going to show you guys the trade here. And basically, I'm going to tell you guys the reason why we took it. So we took the trade around here, cut it a little bit early because I tried my stop pretty early too. I'm not even going to lie. So I don't know the exact area on the wick, but just say it's there, you know. So eventually my take profit was right here. That was my first take profit, and then eventually my stop loss was at the high of the inversion for rally up. So you can see the risk to reward was a 1 to 2 right there. We did risk a lot less than we usually do. I was thinking about risking 2%, but I just didn't know the lot size. Again, I don't use lot size calculator, but I entered, and then eventually we saw this move down, and then eventually we had this fair value gap right there, hold, and then we started dropping lower. I trailed my stop. As soon as I saw this fair value gap be created and tapped into, I put it at the break even, and then eventually you can see we created another fair value gap, and then we started dropping lower. We had another fair value gap here overlapping with that low, and we never really retraced back up into it until later on, not even then. And then eventually you can see we eventually came back up and then eventually dropped. We had the main reason why I took this one on SPX is you can see we had a lot of low resistance going up into that move, and eventually the high resistance is all in here, and that's kind of why we had a lot of more trouble going past it right around here, you know. And that's kind of why I cut the trade. And then eventually NQ, you can see it's just a bunch of high resistance. Dow Jones did look really favorable, and I was thinking about taking it on Dow, but the thing was it's already way too weak in my opinion, and it already swept so much sell side on you know, the lower time frames, or I mean the higher time frames. Basically today is April 24th, Wednesday, as you can see. We're back and forth. Do I want to trade today? No, you don't want to trade. You know, like, I want to be in the zone when I'm trading. I tried listening to lo-fi. It just doesn't hit, you know what I'm saying? I tried listening to Zen Garden music. I feel like I'm just like I feel like I'm too much of a Zen mode right now, and like I don't know. I feel like I need a good mixture of like in between. I feel like the classical was by far the best choice, and you know, the music says a lot without words, in my opinion. All right, so it's the same day. Spectacular trades today. One was on, I think I showed you guys on NQ, but we're gonna journal. I still have yet to journal it. This one was on the 1 minute, I do believe, and then I did clean all this up. Nothing wrong with this one, honestly. It's really just waiting for the reversal confirmation, honestly, probably on the higher time frame, and using time to our beneficiary. You can see the reversal is down here in a higher time frame POI, which would have to probably be so this is going to be the original trade, but we did get stopped out because of the maximum loss limit being triggered, even though the trade would have worked out in my opinion, and it probably would have got me out of drawdown and just made me, you know, a lot more than I needed to. Yeah, it was a good amount of risk. All right, so here's the account. You can see just a little $5 short, I guess, because of the spread. Overall loss limit hit. You can see max permitted loss, trading overview right here, view. It wasn't even a stop loss hit. I think 39,304.4. So then they just canceled me out. The TP was at 3856. So around here you can see that. That's pretty much really it. Can't really say anything else, honestly. Here's analytics. It's about to be the end of March, or I mean April, and this is like the first month of Q2. What I'm really thinking about doing is, I need to get a new chair, you can hear that. What I really plan on doing pretty much is creating a new model. So what I realized when I'm using the Smart Money Reversal X standard deviation model, which I posted on my other YouTube channel, and so what I plan on doing is like really revising how I trade this Smart Money Reversal X standard deviation model. It doesn't always bring success in my opinion, especially whenever you're trying to catch that smart money reversal, you're trying to catch that little top or that bottom, and it can be very, very dangerous because you can get hurt using this model multiple times. And more of a reversal model, and I want to have a model where it's more of a continuation. Even for the strange ICT X market maker X model one, that one is a lot more mechanical, and it really isn't more of a reversal one. It's more like a continuation. That's really it. Not trading it as a pattern, I guess. Not just strictly going to the lower time frames, having that higher time frame narrative. I guess time frame pairing too on the smart money reversal models is essential too. And I'm gonna go do it on the phone. So I'm gonna go document that. Peace. All right, yo, what is up, guys? It's Roxy. I know it's currently, let me check the date for you guys. It's currently May 7th. It's the second week of May, and basically I've stopped basically documenting and trading in general. I know I showed you guys we lost the 15 and then the 10K just due to bad risk management, inconsistency in our schedule, and just like, if I'm being completely honest, just inconsistency in everything in general, you know, from waking up early to, you know, watching the markets. One thing that I did do pretty well was tape reading. I was tape reading pretty fairly a lot after, and then eventually just before, you know, we eventually started or like just before we blew the account, I guess I was tape reading a lot more, trying to get myself out of that drawdown, and like just like, I don't know, I feel like sharp as ever when I was tape reading. But again, I took a break, and as of right now I'm currently still taking a break, and I will resume trading in probably monk mode, and I'm going to just continue to review as of right now. I'm going to review every single trade, and then I'm going to review all the notes that I've had, and you know, my commonplace book, my notes on my phone too, and then I might review some ICT notes, and you know, the 23 mentorship only really sharpen the knife again once more, even though I haven't watched ICT since last year in November or December. I mean November or October. I think late October is the last time I actually watched them. In November I stopped watching them. I remember really one of the key things is risk management, and then just consistency, I guess. That's another one. Again, just like when I'm reviewing these trades, I feel like I force my bias and I really don't follow the order flow. That's another one. And then I feel like I marry an idea, or I marry a bias, which isn't really ideal, and I look for a pattern whenever I'm trading like a certain entry model. I look for a certain pattern I enter. I feel like I become a pattern trader, so I don't want to be like that. One of the things I really need to work on is measuring the order flow, following the order flow. I'm not going to say I'm going to do these certain things and not do them. So